SlateStone Chief Equity Strategist Erin Gibbs. Erin, so let's talk about the defense investment proposition here, or
right. It is contrarian, right? It's early in the game, but we're just seeing the early signs. And I know it's a little contrarian because we have been underperforming for so long, but I think we've got enough things lined up that we should really talk about them.
Okay, so you've seen signs of outperformance recently.
Yep.
Staples have had their moment. Healthcare has had their moment. Utilities, I feel like they kind of get because of the AI story. Credit spreads have been a strong indicator for you, and the flows. I haven't seen the defense flows, but they're coming in pretty good now?
They're coming pretty good. And in fact, momentum is the worst performing factor for this month, which is just the opposite of what we've seen pretty much for the past 3 years. So we are seeing some flows, but I think the credit spreads are really what there's a high correlation between the high yield credit spreads and defensives, and they've reached really new highs. They're looking to break out, and I think that's an early sign again to just maybe take some money off of your high momentum stocks. We know those valuations are getting compressed. The margins are getting compressed. We saw that with the Tesla report. We're seeing that with other reports coming in. And I think you may want to just move some money to something that's a little safer.
And this is a tactical positioning for you. So you're going to maintain some momentum exposure.
Absolutely. I'm not saying sell the S&P 500. Maintain your core.
Right.
But let's trim some of those high valuations and add some defensives. Because they're probably underweighted at this point. Let's get them to market weight.
All right. So let's talk about some individual ideas then within this, within all of this. We're going to bring them up here. So Insulet.
Yep.
PODD. I know that whatever they do has to be, the symbol gives that away to a degree, right?
Well, they're diabetes to delivery. They have a very special competitive advantage. They use a tubeless system for delivering insulin that nobody else has. It's very user-friendly. They have an automatic delivery system. It is a more volatile stock for healthcare, surprisingly, for being a diabetes insulin delivery. It acts a little like a biotech, but I think here is a really good entry point, and just very strong high growth, double-digit growth for the next 2 years. So for healthcare, very good growth.
Cisco, I'm hearing the name occasionally here and there.
Yeah.
Listen, we've seen the reinvention of Oracle and some of these other names that were in the old tech bubble. They survived. They've emerged. Is Cisco reinventing itself?
They're doing their best, and I think they're doing the AI, they're doing the cybersecurity, they're doing all the shifts that we want to hear. But another thing about Cisco is that you actually get somewhat decent dividend yield. So again, it's just a nice, safe defensive. And if they are able to reinvent themselves and pull out as part of the AI growth, that's great, but for now they're still doing very well, very consistent, beating their earnings. It's November 12th is their report date. I think if you buy it now, you're going to be happy on November 13th.
Okay, we keep all of this, right? We keep a record of all of this.
Yes, I do. Absolutely.
All right, I'll be calling you up on November 12th. You know that, right? Listen, I want to give you props because I love your work, and we do this thing on Fridays where we give people props. But before I let you go, overall market, we just started the show off talking about how it's like the old Timex commercials. You're too young to remember, but takes a licking, keeps on. You remember that?
Of course
this
I do.
Market, I mean, every time it gets hit, it gets right back up.
Yes,
and
it does.
To me, it's amazing how many people, professionals, fight that. I mean, it's like the first thing I learned when I started on Wall Street is don't fight the trend. The second thing was don't fight the tape, don't fight the Fed.
No, and I mentioned this in my notes. I was really frustrated with a Wall Street Journal article where they said, sell out of U.S. and buy international equities. And when you look at what Europe is doing to themselves and shooting themselves in the foot time after time after time again, I would say, look, rotate within the U.S. before you start dumping money into Germany and France.
I agree 1,000,000%. I'm the first to tell you the market's not always the economy, and certainly their hot market this year has nothing to do with their economy. Absolutely. And so beware, buyer beware.
Buyer beware.
Good stuff, Erin.
All right,
appreciate
thanks,
you.
Jim.
See you soon.